Welcome. Good morning, everybody. How are we?
Well, thank you.
We've got a couple of stragglers just trying to figure out where they're going, I guess. But it's nice to see everybody here bright and early and bushy-tailed. Monday the 7th. I guess just a little bit of housekeeping before we get too far into what we're doing. You've all signed a release outside which basically says that you understand that I don't understand what your financial position is. What we're talking about over the next couple of days is the way that I've modified GAN's rules or use GAN's rules to trade various markets. The material we're going to talk about can be applied to any number of markets. Some may or may not work for you, but the rules will generally work across a broad spectrum of markets. When I say they won't work for you, I'll talk a bit about that in a minute. So if anyone has an issue with the general disclaimer, you're welcome to leave. I take no responsibility for what you do on your own time. I am trying to just get a screen recording of the event, so I am recording it here. Hopefully it will work. I don't know, I'm not very good with technology, that's not my thing, but we just didn't have time to set up a full video pack here today. We only got access to the room this morning at 7:45, so just to get ourselves organised. So hopefully there'll be a recording. Whilst I said I wasn't, if the recording works, it'll be posted in your portals and you'll be able to refer to the material in your own time. In terms of just general housekeeping, the washrooms are just behind us. The gents is in the corridor. The ladies is just a little further down to the right. If you need to go to the washroom, feel free to get up and move around, do whatever you've got to do to keep yourselves comfortable during the day. I'm still conscious that people are conscious about things like COVID. Kirsten does have some masks. If anyone feels they want to wear a mask, I don't really mind. I won't be because I won't be. But you're welcome to do that. If you've got any questions through the day, please let us know. We'll see what we can do to accommodate your various requests. I thought it was an interesting venue, this one. This is the original Masonic Club site here in Sydney. And this facility I used once before with Craig from PropX to do a little couple of hour presentation for him. And I thought it was kind of central. Did everyone find it pretty easy to get to? Is it good generally? I mean, these guys have been pretty good to work with. We walked in this morning, they're all pretty organised. So if it is, and we're going to do any more of these things, we might try and keep them central here in Sydney. See how we go. I'd like you to ask questions through the day. There's about, I think, 2/3 of you have been to events before, and there's some new people here. Some of you have recordings. Some of you have spoken to me on the phone. Some of you it'll be the first event you've been to. So there's a broad cross-section of people here. There's some very good traders in the room, and I'm not about to identify them, but there are some very good traders here in the room. And I think it's interesting that they keep coming back and refining what they do. It can be something, just one thing that I say, one thing that somebody, one of your other inmates says during the next couple of days. It could change the way you put your plan together or the way you decide to approach a particular market. So no question's a dumb question. The only dumb question's the one you don't ask, because this is your opportunity. Once we leave the room, I'm off to the Bahamas, you'll never see me again. Network, talk to your fellow inmates. I say that with due respect. As I said, there's lots of people doing things somewhat differently. I think that a lot of us have been battling with the psychology of trading in the last particularly 6 to 9 months. For those people with smaller accounts, the intraday volatility has been very, very high. The concept around things like arbitrary stops that I've offered to give people an opportunity to take trades in this sort of market and control their risk, those things have been also somewhat difficult. You'll get into a trade, you'll take some profit, and then you'll get stopped out before the market runs on because of the intraday volatility. If you look at the basic swing methodology that I use, stops behind the swing, I think the S&P has had a 100% win-loss ratio if you could carry the risk. And that's where the psychology comes in. How much risk can you carry? I'm not saying carry more risk. I'm saying that we're all different. And I'm saying that as you try to crush risk, you also reduce the win-loss ratio generally. And the system that we're going to talk about today and tomorrow, that system is designed, and I refined it to the way I present it to you guys, so that it can get us through these periods of time without destroying our accounts. I think that's something to remember. The system's designed to make money, but it's designed to protect our capital when things aren't running the way we'd like to think they should be running. How many of you are subscribers to the newsletter? Is everyone a subscriber? Deb was and not. So who's not currently a subscriber? I just want to know so I can... Douglas at the back and Deb. Okay, 2. Oh, Marion. No problem. I just want to know so I can kind of... I'll talk about stuff that may have been written that would have maybe been in a newsletter. If it's something you need to ask me about, just put up your hand and ask, because I don't want to kind of curtail what I say. A lot of you will have seen some of this stuff before. One of the things that's often said to me, and I was talking about it with somebody yesterday, they'll rewatch a video that maybe from a previous event, and they will send me an email and say, I'm pretty sure you didn't say that on the day. Pretty sure you're in my place last night and you stripped that bit in. I think that learning this stuff, learning any sort of discipline, requires layers of information. Layers of information create knowledge. And I think that you can't take on certain layers until you've got the other layers bedded down. So if you kind of got to a part in your study where you will watch something and go, hang on, now I can understand why you said that. Otherwise, you'll be focused on something over here and I'm saying something over there, and you just miss that altogether. When I first really got involved with GAN, Lambert GAN were running workshops and Kenny Gerber was kind of driving those. And I think they used to do them twice a year. And I used to get on a bus twice a year and go to the US and sit in those workshops. And I think some of the basic fundamentals of some of the stuff Ken was talking about, it took me 4 or 5 workshops before I really got my head around what he was saying and how he was doing it and what he was using. And I use some of that stuff today, but I don't necessarily use all of it. But what I'm saying is it took a long while to become comfortable with the material that was being presented. He presented the same material, the same way, from the same slide deck every time we met. But every time we met, I took something else away from it. So keep your ears open, you never know, something might gel. You'll see more, building on the base of knowledge, what I was just talking about. If you take one usable thing away from this, it will be worth being here. Just one. Now, I spent a lot of money studying with a very good trader in the US, and I guess I probably spent in all maybe 15 days full time with this guy, and I took one thing away. One thing away, and I've given it to you, or an adaptation of that concept I've given to you in a very simplistic form. I use it every day. It was one thing. It cost me the better part of $100,000. Don't tell my wife, wherever she's out. That's good, she's gone. The slides will be very detailed, guys. As usual, I do make them detailed. I do it for a couple of reasons. One, I'd like you to be able to walk away and try and recreate the day. If there's something that you think you missed, you can make a note in your book and maybe go back and review. I also do it because I'm a trader. I spend my time trading. And when I write these things, I don't want to miss something. If there's something I thought, I'd like to mention that, I tend to put it in the slides because I don't forget. So I've got a memory like a sieve, and the olives in the martinis probably don't help, but they certainly don't hurt. So I do it for a couple of reasons, that's why I do it. So the slides will be pretty good. I think the slide deck, with what you've already got, I think we come close to 600 slides for this presentation. So there's a fair bit of material to go back through when this is all done. This is where it starts. The hard work gets done when you get home. Achieve the most over the next 2 days. Ask questions of myself or your fellow inmates. I mentioned that. No questions silly. Maybe just something you need to clarify. I'd like to try and get a bit of a discussion going, particularly tomorrow, about psychology. I was talking to a couple of guys outside, talking to some guys over the weekend. The psychology of trading is more than just lie on the couch and tell me when you first started hating your horse. It's not that kind of psychology. It's dealing with stuff like, when things don't work, or you have losses, or you have something that works and you make money out of it and then you charge off and do something else. There's a few people I'll put a spotlight on in here. The recalcitrant people, please stand up. And I've been guilty of it. Kenny Gerber's a very good friend of mine, and we talk about this a bit, because we'll have something that's been working really nicely, and then all of a sudden we figure we've got to go and tweak it, we've got to refine it, we've got to go and create something else. And so you leave the thing that's making you money and you go and look at this other thing over here that's maybe won't make you any money. And what's hard is when you do that, coming back to the thing that was making money becomes difficult, because you've already told yourself that that's not the best thing that's around. That's why you're looking for something else. Now, trading's not a zero-sum game. It's not a 100% win-loss scenario. You have to settle with something that's close to perfect. If you keep striving for perfection, that's fine, but the perfection you should strive for is in execution, not in a plan that gives you 100% win-loss ratio or 100% of winning trades. We all want winning trades. Let's not fool with that. But I'm yet to find something that will consistently give you 100% winning trades, unless you're trading a weekly chart with very small targets and very wide stops. Where are we? So morning tea. We'll have a bit of a regroup this afternoon, make a decision on where we start tomorrow. There's a fair bit tomorrow. It's going to be a pretty busy day. Morning tea normally 10:30 till 11 if you need to make some calls or anything. Lunch will be 12:30 till 1:30, and afternoon tea 3 o'clock till 3:30. You guys generally only come for the food. I know there's a number of you here just for a good feed. I'm sure these guys will do a good job of the catering. Washrooms, as I said, are outside in the corridor. Oh, I have to say, if we have a fire or the fire alarm goes off, we're all supposed to leave via this door, right here behind Greg, and we go downstairs and we meet outside the Commonwealth Bank on Castlereagh Street. But unless somebody's not happy with the presentation and decides to light up the bathroom, I'm hoping we don't have to do that. PropX, who's using Craig at PropX? Just out of interest, right? So Craig's in this building, if you don't know. He actually lives upstairs on level 24. Funny that, PropX 24 on level 24. It's a bit cute. Craig will be down here this morning to have a bit of a chat to us. If you've got any questions, I think he's going to do a little presentation. He wants to show you some stuff in the software. Stefano, morning. He wants to show you some stuff with the software, and also ask him any questions, because if you've got a question of Craig, there's a good chance that someone else in this room's got the same question. So grill him, put him under the microscope, give him a hard time. That's what he's here for. That's why we pay him the big bucks. I've known Craig for a lot of years. Those of you that aren't using Craig, I've just found him to be very, very responsive over the years. He will take a phone call. He's happy to help you. That's why I use him. I don't get a kickback from supporting him. I just know that if I've got an issue with an account I'm trading with him, he's always there and will help out. So if you're not using Craig, you might want to have a chat to him. He'll be around, and his counterpart Julianne, who I think some of you are working with, will also be around over the next couple of days. So if you have any questions, hit them up. That would be a good thing to do. Yeah, if you're just starting out, there's a couple of new people in the room. If you're just starting out, Craig would certainly be a go-to for me. That PropX platform's pretty cool when you get to know it. It allows you to trade all sorts of things in the one space. He's not going to be the cheapest broker in town, but he's certainly probably the most responsive. Right, yeah, nothing in it for me, blah, blah, blah. The Chicago Mercantile Exchange is the exchange that I trade most of my trading's done through the CME. We have done various presentations with those guys at events before online, and I think a bit gets lost in the translation. So Graham from the CME is going to be here this morning to talk a bit about the CME, what they offer, products, some educational services, where you can find information related to various markets that you're trading. I had a number of questions this morning and over the weekend about things like futures products. Where do you find the information related to a particular futures product that you might want to trade? The CME website's a great resource for that. And also for me, when I first started trading, I found it very lonely. Anyone else find it a bit lonely? Like you sit in a room and, mope around a bit? I think that I reached out to some of these guys. It was like just making a connection. When I've been in Chicago, I've gone down to the Exchange. If I'm in New York, I always go to the Exchange just feel a bit connected to the thing that we do. Now, that might sound like a weird thing to do, but, some of these, just having some sort of connection that it's more than just a flat screen in front of you for 8 hours a day is, I think, useful. So Graham's going to come in shortly and do a little short presentation. I was hoping he might be here already, but he's not here already. In terms of the material, I'm always stressed when I put these things together. I either think I haven't got enough material or I end up with too much material. So I'm going to try and move at a pace that where no one's left behind. If you feel like you're drowning, put up your hand and I'll slow down. And I'll try and keep an eye out and make sure I'm not got you guys all stalled. We have sections in the agenda, but what I'm going to do, if we get through some of the stuff quicker, I'll just start with the next part of the material. So it's like a continual event. I'm just not going to kind of kill time. If there's any time left over, there's plenty to talk about. So most of the topics we're going to talk about in the next 2 days, I could spend a full day talking on each of them alone. So there's plenty of material. Remember, all of this is second nature to me. So if I say something that just goes over your head or you don't get, ask a question. Because I think Kirsten often says, I don't know if you all know Kirsten at the back, she's apparently the good-looking half of my voice. So she often says that when she listens to me speak about this material, she kind of says that, you just don't understand how much you take for granted that you've built up in knowledge over the years. So we just want to make sure that you kind of get it. If I'm moving too fast, sing out. So maybe take your notebook out. I do this every time. It's just like a sense check. And maybe write down a few things that you'd like to achieve in the next 2 days. It might be things like understanding the Bitcoin product, futures versus the FX. So we're going to talk about the futures product, which trades on the CME as a micro Bitcoin futures contract. And we're going to talk about the FX product, which is the BTC US dollar product, which is a cash product, which is tradable through PropX. You might want an understanding of how to trade it in terms of a plan or in terms of the value of the pips and points and various things. You might want to refine your trading plan or walk away with a trading plan. You're actually going to walk away with a chart that you're going to create in the next couple of days that is up to date. So you're going to walk away with a piece of paper like this. It's been filled in, up to date with your trading plan or my trading plan that you're going to execute in the next couple of days. And we're going to create that together. So when you go home, you can put that on the wall and keep it up to date, or you can use it to light a fire when winter comes around. It's up to you. I'd suggest putting it on the wall would be more versatile, valuable. You might want to look for an understanding of the methodology behind what we're doing. It might be a deeper thing we're looking at. It might just be a refresher on the mechanical system. I had a couple of guys in the room here who, thank you, have attended everything that I've presented. Kind of makes me feel like I've got groupies, I guess. But one of them made the point after last June's event. We did a 2-day thing in June, like an entry-level thing. And they said, you know what, that was actually some of the best work you presented because I drilled right down to the basics and we rebuilt the whole plan from the ground up. And you guys got, I think, 4 videos in that initial pack on your in your portal thing. That was some of the basic stuff that we covered last year. And they made the point that clarified a whole bunch of stuff that they were in some ways doing wrong. They weren't reading the chart correctly, they weren't drawing the chart correctly, and consequently they weren't getting the results that I was getting. Why? Because they weren't doing the same thing. They were ordering coffee, but they were ordering coffee, but they were being given tea. It's just completely different. Maybe you're just here for a prod. I'm really good at that. Just give you a bit of a prod, cattle prod. I think these things. I said I went to a whole bunch of things in the US with Kenny Gerber, and I did them until he stopped doing them, and it was expensive. We're like Aussie dollar at 50 cents, and you're going to these things. I understand the cost of education; it's ridiculous, but it was like my comment about the CME. It was a touch point to get me out of the office, to get me in a room with other traders, to get me in a room with Ken, just to get me thinking about stuff that you don't think about. We get so focused on what we're trying to do. We have a subscriber overseas, he's not here today, but we have a subscriber overseas who's been so focused on just the plan. He's reading the newsletter, but he's not taking any of it in. So he's reading the newsletter and he gets it, but he doesn't get it. So he's so focused on the plan, he's not looking at some of the bigger picture stuff I've been talking about in the newsletter, which is a layer that we apply to what we do. As we develop as traders, we add layers to what we do. More complexity gets us closer to the market, but more complexity also causes confusion. And one of the things that was a big issue for me in the early days was that as I learnt more and I figured out I needed more complexity, I ended up with these really complex charts and they were untradeable. I just couldn't take a trade. And that's not good. That's why I stripped it all back to the bare bones. So, where are we? So, in your notebook too, what strength do you think you possess as a trader? What do you bring to the table? Do you have a plan? Do you have discipline? Do you have, capital, determination, I've traded plans before. I've developed plans before. I understand what a good plan is. I understand what a bad plan is. I understand that it could be a good plan, but I can't trade it. I'm going to talk a bit about that. The plan that you develop and test that has the highest cash result may not be a plan you can trade. I have a number of plans I've developed over the years. They make a lot of money on paper. I can't trade them. My psychology won't let me trade them. They might run at a low win-loss ratio, 50% win-loss ratio. I can't trade that. They might have 9 losing trades in a row. I can't trade that. I know what my tolerance is. 3 losing trades in a row is the maximum I can tolerate before I can't pull the trigger on a daily chart. Intraday is a bit different. I can take 8 losing trades intraday without losing confidence to pull the trigger. After that, game over. So it doesn't matter how much money the plan makes on paper, if you can't execute it, it's useless. So part of what we'll talk about mindset a little in the next session, and there was a session, you should have had a video on psychology or a discussion about psychology in the pre-learning work. The whole thing is about knowing yourself. I think the biggest thing that people don't get about trading is the most important thing is knowing yourself. What's your tolerance? Now, somebody here, I can't remember who it was, I think maybe Greg, I know I've had the discussion with Kathy, Paul, it's a few, I've had the same discussion, it's like Groundhog Day, about the further down the path they go with trading, the more they learn about themselves, what they can tolerate. We think we can buy here and sell there, we think we can do that. But then when the market rallies hard and then pulls back hard, all of a sudden, no. And the market will pull back and then you'll watch it and it'll look like it's going lower. You'll sell there just as it's about to rally. So the reality is you can't buy there and sell there because your psychology won't let you sit through the drawdowns and the pullbacks. That's natural. That's just what happens to a number of us. Some of us will be a little different. Some can sit through a bit more than others. But generally, these sort of tolerances are things we need to understand. What can we tolerate ourselves and still pull the trigger? So you might understand about all the products, or you might want to learn something more about various products where you might trade them. Are you focused? Can you focus? Do you have a routine? Are you in front of the screen? Somebody here this morning, I think it might have been Michael here in the front, said the market doesn't wait for you. 9 a.m, the market opens. It's not waiting for you. If you're not in front of the screen, tough luck. What do you see as your weaknesses in trading? For me, originally it was just not understanding myself. That was a big one. My expectations were too high when I first started trading. I have very low expectations. You've got low expectations, you're never disappointed. If you expect the food to be crap at the restaurant, it can only be good. Set your expectations relatively low. But I have very high expectations of myself and my work ethic. So I am up, I am at the screen, I can be 36 hours travelling, and as soon as I'm off that aircraft, first available time, I will be at the screen when I need to be there. It's not negotiable. The way I write the newsletter, you guys can see it, you can look at the timestamps. Every morning, religiously, I'm out of bed in front of that screen, unless I've got something super pressing, a family matter or something to deal with, but I am there and I do it every day. I manage my trades at the same time. I'm religious about it. That's the sort of dedication I think that you need to have if you want to be successful in this game. Now, that doesn't mean that you've got to do it at the expense of everything else. I think you've got to find a balance, in what you do, but you need to understand that there are certain times of the day where you have to be focused and you have to be in front of your screen if you want to be successful at this. Perhaps if you're really honest with yourself, there might be somebody in the room who will write down, "I don't have a plan, !" That's why I'm here. That's a really honest thing to write in your book. I'm not going to check what you write in your book. I don't care what you write in your book. But I think that be honest with yourself, because if you're not honest with yourself, you won't actually get a suitable result at the end of the day. Am I easily distracted? If you're working with something and it's kind of bobbling on and, is there a little shiny ball over here? Might be the moon, it might be some piece of economic, whatever that's coming on your thing. Oh no, they might know more than I do. Trust me, at the end of the day, when you've been doing this for a while, you will know more than most of the commentators that are out there spruiking stuff into your inbox. And you have to trust that you know what you're doing. Because if you don't, you will be influenced by all of those other people, and they will help you make really poor trading decisions. They will help you get off your plan. The plan we're going to talk about today and tomorrow can be traded with no external influence at all. No newspaper, no media, no radio, no economist, just what the chart tells us. And that's how Gann traded. Did he know other stuff? Did he have an idea what was happening around him? Sure he did. But he traded what the chart told him, not what the Economist or the Channel 9 News or the BBC said. If you remember last week, mid-October, early to mid-October, the media's all saying this market was falling out of bed, it was going to collapse, it was going to fall over. One of you actually said you were at a dinner party, had somebody who said that the market was going to collapse on the 20 something of the month and it was going to some ridiculously low price. That's the stuff that will influence you taking the first long trade that is offered, which has been a very good trade. So you can't be influenced by that stuff. You sit there at dinner and you go, "Oh yes, thank you. Thank you. Oh yeah, no, that's great." Don't argue with them. That's great. But then when you go back to your office, there's your chart. That's what the bar says you do. That's what the plan says you do. Execute. That's how aircraft get flown. The manual says do this, that switch goes on, that lever goes forward, execute. You don't care what the media says or what your mate over at TAA or Ansett say if you're flying for Qantas. You fly the plane the way you are told to fly the plane as per the plan, not as per the external information. Okay, the more honest we are with these things, the better off we'll be at the end of the day. That's kind of my view on it. Anyone want to argue? If you want to debate it, I'm happy. I'm not here as the be-all and end-all, the oracle. These are just my views, and I'm happy to debate them. I'm happy to talk about them. I'm happy to agree with whatever you say. I'll probably never take it on, but I'm happy to agree with it. Or I'm happy to kind of point out why I think maybe there's a better way to do it. I mean, that's what I'm here for. So this week's a bit like learning the old times table. Seems boring, but it's kind of the cornerstone. Now, if you the key words in that sentence are times table, the mathematics. Now, I've talked about square roots, I've talked about cube roots, I've talked about all sorts of stuff in the newsletter, and a lot of it will go through to the keeper. But everything in the markets is relatable to some sort of mathematical function. That was Gann's belief, and I've proven to myself that that's the case. So one of the things that I think society has done has been dumbed down by. There might be Graham here. Kirsten, would you mind just popping your head out the door? I think that might be Graham. I think technology's dumbed people down. I think we go to our phone or a calculator to do a quick calculation. Back in Gann's day, it was all done in your head, mental arithmetic. He could convert letters to numbers and numbers to letter in his head. He could do square roots in his head. Was he a savant? No, that's just the way they were trained. They didn't have calculators. So we go to a calculator, so we can't do that stuff. So we actually have to physically go to do a calculation, whereas he would just stand here and go, the square of 43 is going to be, 1849 or whatever it is. Square of 45 is 1936. Square of 44 is 1936. 45 is 2025. They're the sort of things that he could do in his head. So it was quick. He could stand on the floor and watch the market reacting, and he could do those calculations in his head. He'd know exactly where he was. He knew exactly where he was in relation to the square of 9, which we haven't talked about, but that's another tool we'll get to in due course. But he would know exactly where a price point was in relation to the square of 9 on the square, and where that was in relation to a previous high or low. And he'd be able to divide that circle in 4 1/8 in his head. We tend not to. We go to Excel, we put the number in, and Excel does the mathematics, we kind of look it up, and by the time we look it up and we figure it out, market's gone. That's why intraday trading, the way Gann was doing it versus the way we do it, your brain will process information much faster than a calculator if you train your brain to do it. Okay, so I'm going to try and talk as Gann spoke. Pretty conservative manner. Where am I? I modified his plan a little. We'll talk about that as we move forward. I added an extra entry to Gann's plan, kind of what I call a with the trend swing entry, just because it takes some of the dodgy trades out of the game. And as I said, if you take one thing from the event and you can use as part of your plan or to refine your plan, then it will have been worth your time and money to be here. If you think you've heard it before, listen carefully. You may hear something now that resonates but didn't resonate before. That's always how it's been for me. I can have a conversation with Ken on the phone, or a couple of the other. I've got some very good traders I trade with in Europe, and we can have a conversation on the phone, and just something will resonate that maybe I'd thought about before but never used. And just because my knowledge is increasing every day. The more I work on this stuff, the more I write these events, my knowledge gets tweaked, and I think about things that maybe I take for granted and how they might apply to something else. For example, cube roots and squares of numbers applying to years, for example, and where we are in terms of the bigger cycle. We'll talk a bit about that tomorrow. So what should you focus on? Creating or refining your understanding of a mechanical trading plan. At the end of the day, the message here is mechanical trading plan. I don't really care whether you use the plan that I'm giving you, the plan Gann used, or some plan you develop yourself. I don't care whether you take my plan and add something to it. You might want to add moving averages, you might want to add ATRs, you might want to add, I don't know, ants walking up the wall. Whatever it is, make sure it's mechanical. Because mechanical things are the only things you can replicate accurately. I'd like you to focus on the chart exercise. I know I have this discussion with people all the time. Drawing paper charts, it's such a waste of time. Well, it's not a waste of time. There's a reason to do it. And one of the reasons to do it is that it's a hand-to-eye coordination thing. If you have to go and physically get a price and write it down and go to a chart and draw it on your chart and make some notations, you will remember those prices. Ken Gerber and I trade beans very heavily. We can have a conversation on the other side of the world or in a golf cart playing golf and talk about the lows and highs that occurred back in the 1930s because we know them. We've hand charted them, we know where they are, we know what the prices are, we know what the dates are. It's all in here. If you just go to the computer screen and go, oh yeah, that was a top. Right. Oh, what was the price? Oh, hang on, let me just have a look. Oh yeah, no, 1663. Yeah, right, okay. Next week, I guarantee when you come back to look at that top, you'll have to go, oh, what was the top? 1633, yeah, right. You don't remember it because it's easily accessible information that never becomes knowledge. Does that make sense? Information is not knowledge. Information are the packets of it's the filling in the sandwich, if you like. Layers of filling in the sandwich. So the charts, I'd like you to focus on reading them as you draw the bars. That's really important. Every bar is telling you something. Every bar is either telling you there's an entry or an exit, or the market's doing something. It's accelerating, it's decelerating, it's coming into what could be potentially a high or a low or a turning point. Reading them in relation to your plan. What does that bar mean in terms of your plan? I can scroll through 10 or 15 charts in a couple of minutes of a morning and know whether I've got 4 trades or 6 trades or no trades. I can know whether I have to move a stop, place an order, and it doesn't take long. My day, I think I wrote in a newsletter this week or last week or something, my week is probably 50 or 60 hours on average, but the physical trading part of it's probably less than 2. Looking at charts, placing trades. The trading bit's easy, that's not difficult at all. Having the plan, the writing, the newsletter, all this other stuff takes up time. Research takes up time. Research takes up a lot of my time. Testing takes up a lot of time. I know we've got a couple of guys in the room here doing a lot of testing, lots of testing, and they're learning lots about the markets they trade. Focusing on understanding what Gann did with the charts, understanding how we might use the signals to enter a market, and I'm going to give you some ideas around exit. My plan is take some off, protect your capital, and let the rest run. So the let the rest run bit becomes very much about you, what you're prepared to live with, how much are you prepared to leave on the table. Anyone trade crude oil? Yep, crude trader. Friday, big bar on crude, we got an initial profit. Towards the end of the day, do you really want to leave 5 or 6 or 10 grand on the table? Or do you want to put it in your pocket? I put it in my pocket. Bitcoin. I shouldn't talk about Bitcoin before we get to it, I suppose, but Bitcoin, Friday, nice little trade, snappy profit, market runs to the top, indexes start to sell off, Bitcoin starts to sell off. Do you really want to leave all that on the table? Newsletter account I have, my own account I haven't. Took the profit. They've got to come and get that off me. And then the market actually sold off, went back to entry, and then it rallied in the last hour or two of trade. That's the bit about you. What are you prepared to leave on the table? I'm not prepared to leave thousands of dollars of profit. I either want to move a stop up underneath the trade, or I'm just going to take the profit and put it in my pocket. And I kind of talk about the 10% rule. If you have more than 10% of your account in profit in a trade, think about taking some off the table. Otherwise, you are suffering from greed. That's a little Ken Gerber, Captain Krusty discussion we've had a number of times where we've been mutilated by leaving our money there. So they're just ideas because we all have different tolerance. You might be more put $50 on the brown horse and let it run its course, or you might be more I only want to put $50 on the horse that's a favourite if it's wearing the right colour and the right number on the day. We are all different. The exit strategy is personal. Your exit strategy at that level will be personal, and it relates to your own fear, greed, and mindset. Fear, greed, and mindset. Fear, greed, and mindset. I mean, that's basically it. That's what trading is about. Balancing fear, balancing greed in relation to your own mindset. What can you tolerate? So stay with me, ask questions. I'm told a lot that the best material comes from answering individual questions. And often the commentary outside of these notes, the stuff we talk about offline or the throwaway lines that I digress onto based on a question. There's no silly questions, just those you haven't asked. So, questions probably on the lips of everyone else, and I'm happy to be as open and honest as I can. If you've got a question, I will answer it to the best of my ability, but I will stay within the realms of the material I'm trying to discuss. So if you want to spear off and ask questions about some astrological thing, happy to answer the question, but not, we can do it at morning tea or lunchtime or something. I don't want to take a lot of time dealing with stuff that's not directly related to this basic mechanical stuff. And we'll be keeping to the mechanical theme. Okay, a note on me, what you see is what you get. I'm a trader, there'll be typos, and there'll likely be some duplication. I try and work in a logistical fashion, so a beginning, a middle, and an end. And I think that when you walk away from here, I want you to walk away with something that you can take and use on Wednesday morning when the market opens. That's unique, I think, in this industry. I don't think anybody else does that. So you'll physically walk away with something you can use. So I try for a beginning, a middle, and end. The random charts this week as examples, there's a couple in the notes. You will find that they are random. I'm too lazy to go and cherry pick. I can't be bothered. So it'll be a chart that was open on my desk generally at the time, or I'll just look for the next available chart to use as an example. I don't cherry pick. I don't go and say, oh, look at this amazing trade. It was 4 times risk to, we made 4 times reward to the risk. They're great. You can find them all the time if you want to go cherry pick, and just go scroll back through your charts and you'll find great examples of that. But the reality is 50% of the time we're dealing with markets that are bouncing along sideways, and that's the stuff we have to deal with. So I'd rather talk about an example that was just on the screen and current than one I had to go and fish around and find. I'm too lazy to go cherry picking. So the other thing is, excuse me, sometimes I'm pretty blunt. Hopefully there won't be too many profanities, but they do slip out from time to time. You can score me at the end of the week. Okay, so I call this off the leash different dogs, same leash different dogs at least. Why? Because the plan will work on pretty well every market that you come across, an FX market, a CFD market, something driven in the futures market. It's just about you figuring out the various parameters, but you can use the same plan. The CME, the Chicago Mercantile Exchange, which is I kind of think of that as my home because that's where I live in trading land. They control and deliver most of the common futures and options products that you will trade. I've thrown options in there. I don't talk about options, but I am going to talk about options in May when we're together, and I know that probably maybe half to 2/3 of the room's coming in May to the 5-day event, which I'm going to use to present my option plan around forecasts. So it doesn't impact what we do here. We bang along, we bang along, we bang along. We have a forecast, and I use options to trade forecasts. I'm going to talk about how I do that. But that's not for today. Whoops, where's my thing? CME has a great website, cmegroup.com, and I would urge you to spend a bit of time hoovering around there. If you're sitting in front of the TV with your iPad, there's always some interesting stuff there. It's a lonely sport. I like to feel I have a relationship with the thing that I'm doing, and so being connected to the CME on some level has been good for me. The CME and CQG, my trading platform, I have a very good relationship with both of those companies because I work with them every day. I work with the CME product, and CQG is the platform I use to trade from. So I know it very, very well. And the only other option I use, PropX24. Obviously I have a good relationship with Craig. I have to say that because he's at the back of the room. But the platform is very, very good. And I use that. I've got a couple of accounts with Craig. So it's a tangible connection. So today, I think we've got Graham. I thought I saw him looking around. Come on down, bring your steak knives. Graham's going to talk a bit about the CME and what they do and what they can offer. Graham Anderson.
Thank you.
I don't know, do you want this thing, or there's a microphone on the desk?
Yeah, that's okay.
And there's the arrows or the clicker or whatever.
Yeah, I'll use the arrows.
It's all yours. Good luck.
Terrific, and thank you for the introduction. Thanks to Craig for allowing me to come today. My name's Graham Anderson. I head the Australian office of the CME Group. That's us. And thank you for the reference in introduction as well. So the CME is the better known as the Chicago Mercantile Exchange. It's actually a group of exchanges, 2 in Chicago, 2 in New York. The CME Group incorporates the Chicago Mercantile Exchange, as I mentioned, the Chicago Board of Trade, NYMEX, which is our energies, substantially our energies products, and then COMEX, which is our metals products, both base and precious. So I have to show you a disclaimer. If you think anything I say is referencing advice, you are mistaken. I'm not here to do that. We are a provider of markets substantially in futures and options. We do have clearing services as well, and we do have some cash market platforms. But if we stay to the futures and options products, I think that's what sort of was referenced, and gives access to a lot of different products, different asset classes, and I think, as mentioned, there's a lot of stuff on the website, so really do familiarise yourself. That's not the only exchange group, but I'd like to think it's one of the leading ones and one of the most diverse for some of the reasons I've mentioned. We offer futures and options on exchange traded products across US Treasuries, short-term, long-term rates products, US equities, substantially on the index side down to sectors, but S&P 500 futures, E-mini S&P and micro products, which are more recently recently introduced. Russell 2000, Nasdaq as I mentioned. So this is the organisation as it sits. We have offices in most global locations. In the region, we have functionality, including our clearinghouse operations services, GCC, which is the Global Command Center. It's quite a US type phraseology, but really it's just those that look after our Globex electronic trading platform, which is where all trades, or substantially all trades, are matched. There are provisions to trade in block and other reasons for large institutional trade. That's certainly a venue to execute, but most trades, and certainly in our time zone, most trades occur on what we call Globex, which is the matching engine, but you may be trading on CQG, or you may be trading on any one of a number of different electronic platforms. They all feed to us if you're trading on a CME Group product. And a lot of these third-party vendors, these ISPs, point to the different exchanges, but I'm just representing the CME today. So actually, maybe chance to show of hands, who's aware of the CME Group, who's looked at any of the products at the CME? Okay, well, that's a great starting point. So this is usually how we overview our products and the benefits of trading some of these products. I always like to start really, well, we kind of talked about the diversity of product mix. So in addition to the financial markets sort of mentioned, there's also financial futures on FX products, futures and options, and then the whole spate of commodity products as well. So soybeans were mentioned, wheat, corn, the whole soy complex, energy, the substantial products being WTI crude, nat gas, unleaded fuels. We're moving into a lot of ESG spaces as well. So we actually have voluntary carbon products, a lot of other things. There's more than 1,000 products in the energy set alone. And then in the agricultural we touched on, and then in metals, as I mentioned, gold, silver, platinum, the PGMs, aluminium, copper, and other base metals as well. So it's a very broad set of markets. And I'd like to think they're a very liquid set. Obviously, liquidity is a kind of an objective or subjective, I guess, way of looking at things. But really, for anything that a standard, or certainly a retail, but even an institutional trader can do or wants to get access to, you can pretty much find volume around the 23 and some hours that CME operates 5 days a week. Capital efficiency is mentioned there. So the way that initial margins work, it's not you're effectively not stumping up the full notional contract value when you initiate a trade. You'll effectively lodge something called initial margin to your clearing broker, and it's not the full value of the trade. But these products are daily mark to market, so they're efficiently called, so your profits or potential losses will be realized, and you'll need to settle for those daily. But that's something you need to speak to your clearing brokers about. Propex 24, we call that our FCMs, our futures commission merchants. They're the largest banks and non-bank organisations that effectively allow retail, in your case, in a lot of cases, in institutional customers across the buy side. We refer to hedge funds, asset managers, asset owners like pension funds, etc. Proprietary members we call as well, generally liquidity providers, commercial accounts, so often those who are legitimately hedging in our markets rather than assuming or moving risk for other reasons. And as mentioned, around the clock access at 23.5 hours, starting with the change of US clocks on the weekend just gone, affects our Sydney Opens. As of this morning, most of the financial products will open at 10, so any time now, which is why I'll be wrapping up around that time. And then the last product, transparency is a really important thing. I think on trade or on screen transparency, where the market's trading at any single point of time, is something that you can readily view. not just where the price is, but an order book above and below, and volumes around the price it's trading at any one time. Last point there, I just made mention of ability to express a market view. So that's what a market gives you access to realize if you have interest to buy or sell a particular commodity. Unlike a lot of cash markets, there's an ability to go short in a lot of futures products. So you can initiate a sell position before choosing to buy it back at a later time. So it works in both directions. So that is my brief introduction about why you might look to view markets like futures and options. And this largely provides a background for most futures and options products. Futures and options in a particular product don't tend to trade across a number of venues. Liquidity tends to reside in a single place at any time. But as I mentioned, we're a US organization. A lot of our financial products generally reference US product, and a lot of global benchmarks in commodities are set in US dollars as well, which is why we have a fair product suite and different access that you can gain there. So these are some of the products we talked about. I think I've referenced most of them, if not all of them. So the currency products. Actually, our currency products are all referenced. It's probably worth noting in our traditional products, actually referenced in the currency of origin. So yen would actually be referenced in a reverse manner than you might hear referenced in the media or in a spot capacity. Generally, Commonwealth countries are sterling, Aussie, euro. In fact, referenced in first currency first, but yen, Swiss, other currencies are generally traded in reverse, so traded in US dollars initially. But it's just worth mentioning because you need to get that reference. If you're looking at a price and it looks completely back to front, it may be because you're looking at a foreign currency that's in a reversed quoting methodology, the way the CME operates it. We also have livestock. Actually, I didn't mention that. So cattle, hogs, these are some of the markets you'll see in used as reference, quite easy to maybe understand, and they've been used in all sorts of media and movies over the time. But we really offer a lot of these products. Okay, so this is quite small. Thought I'd just make reference to our micro E-mini futures in the equities, well, not just in equity space, but initially that they came about, and they have a smaller notional contract size. A lot of cases only a tenth of our traditional contract size. I'm going to speak about notional. It's effectively how a tick value, or let's start in different ways. So it's the size, the notional overall size of the contract that you might be trading at any one time. If we're looking at E-mini S&P contract, it's the index that's trading at the particular time in multiple of the tick size. The tick size in a micro contract is actually tenth of the size of a big contract. So you're trading a much smaller contract, which is useful if you have a smaller outlay, or for a lot of firms who really want to be very specific about their hedging requirements, they can use a smaller contract also. So this is just the genesis of how the micro products developed. FX futures actually in 2009. And then our metals products not long afterwards. Really though, and then they're all important products to the exchange, and they'll all be something you'll be looking at. But I think micros really came to the fore when the equity business line management, which is what we refer to each of the product lines internally, introduced equity indices in these smaller size contracts in 2019. And in these 3 years to date, they've traded over 1.5 billion lots, which is a pretty significant volume. It's not a dollar value. It's we always quote things in futures contracts, and we often reference things during trading day in average daily volume. So that's kind of how we reference liquidity in our markets in ADV. So these are how the products have moved ahead, and the success of the micro products has led us to list and launch additional micros in various energy contracts and others. Contract spec, I would really advise everyone to understand what they're trading. Look at what a contract spec is at any one point. So this is what I referenced, top left corner. Well, actually after contract size, we've got micro E-mini S&P futures. $5 times the index value if it's trading $3,700 or 3,700 index points, 3,500, whatever it's trading at the moment. The overall notional contract size, as we talked about before, is probably about $17,500 at the moment, but that obviously changes with the underlying index and how that trades. So I couldn't emphasize, if there's one thing, you need to understand what a contract is and what the notional size is. Then you'll get to understand how and why it moves in a particular way. These are product codes, how they're listed on our front end, which is Globex, as I mentioned. So there's the product code, which is quite often similar to how various market vendors quote as well, but not in all cases. So again, make sure you are looking at the correct product via the product code that you expect to be trading as well. That would be something that I would advise. Contract months. So contracts generally, liquidity is something that generates liquidity really finds a home when we have standardized contracts. In a lot of our product set, it's different in the commodity markets, where there might be seasonal aspects to why beans or wheat or other products trade in particular months, but a lot of financial contracts, they trade in quarterly contracts. So March, June, SEP and DEC represented, don't have to remember the letters, but if you trade quite a bit, you'll know them. H, M, U and Z, every letter is represented, or each month is represented by a varying letter. H is March, M is June, U is September, and Z is DEC. So that's something you should probably become familiar enough, because it will reference the contract that you're trading and liquidity. Because at quarterly expiries, there'll be a roll period, and then you'll move to the next quarterly expiry if you wish to carry the position beyond contract expiry. A lot of the case, that's probably unnecessary, but that's the process of a quarterly roll. I think we kind of ran through some of these volumes. This is how, as I said, we reference liquidity in our markets. So that first line is probably a good example. 310,000 contracts traded on the first day of our E-mini equity futures contracts. So 310,000 contracts traded on that day. We would say it's too early to have an ADV, but if you cumulatively add all our days and divide obviously by the days, and you'll see the volumes as they develop. And they're traded by participants globally. As I said, contracts are generally available around the clock. We call ETH, or electronic trading hours, extended trading hours, the hours that effectively start after Chicago morning or after Chicago afternoon closes. As I said, as of today, in all product sets other than AGS, 10 o'clock Sydney time is the reopen, and volume trades. In that, there's a delineation or differentiation when there was a floor traded market operating, trading in pits. Generally, there's very few pits operating nowadays, particularly since COVID. The only pit that actually operates now on the CME, on the floor of the exchange, is just Eurodollar and SOFR, which is a 3-month replacement rate for US dollar LIBOR. So the only products that are trading now on the floor are short-term interest rates. They're actually socially distanced, which means that they took up, that one pit ended up taking up the entire trading floor, which is a particularly large venue in Chicago, just because everyone had to be 1.5 meters apart, and everyone got very used to trading on screens. The only reason that pit's probably around still is just because there's a lot of combinations of things that have to happen together in short-term interest rates, and you can have a particularly large group of trades occurring together with a lot of different legs. So there is a value of having that. Other than that, electronic trading is probably to everyone's benefit. What it means that everyone can access the same price at the same time. There's not a different price for a retail trader, or a different price for a commercial trader, or a different price for a proprietary or any other trader for that matter. So it's an all-to-all market, which I think is one of the true values of the product set and the futures markets that are generally traded. So 22% of volume occurs in non-US hours, and we have, as it mentions here, trades submitted by almost 200 countries globally. We kind of track that as a country of origin. It's just for our interest as an exchange to know how to resource best the various countries. We have offices in the region, small office in Sydney, main office in Singapore locally or within the region, but offices in most commercial centres, helping substantially with education, as I'm doing today. I'll skip through that maybe, just to get on some different things. All right, so these are the metals products again, and again, micro metals products. They're going to trade substantially in line with our larger metals products. And there's generally trading at very similar prices because there's participants in the markets who will trade full-size contract, participants who will trade less size or smaller size micro contracts, and price out any differences between those two contracts. So you'll always find that they're trading at very similar prices. So these are another 4 products that are very available to trade. Probably find that gold and copper are 2 of the most liquid amongst this set, but silver is interesting to people, as is palladium. So again, look at the liquidity of how these products operate when you look at a screen, and you look at you do your research and you understand how they all operate. But you may have a particular interest to trade in a PGM market, like one of our platinum palladium markets for whatever reason. You might have a background in that and have an affinity for that. So that's our metals products. Volume has been strongly growing in that as well. We kind of look at 2 things. We look at average daily volume. We also look at something called open interest. Open interest is really about the health of the market. It's about those people that wish to maintain positions for longer than a day, used for hedging purposes, and a lot of contracts are held throughout the course of the whole contract period. So for that front quarterly, not everyone's trading in and out every day. So we look at open interest. I'd advise you understand what that term means as well, because it particularly if you towards the tail end of a contract, you'll see how open interest moves between the varying contracts and where open interest resides as these contracts move to expiries. I just touched on liquidity. The bottom view is just our CME Direct. It's just one avenue to market, but CME, being a fairly large exchange, does list every one of our products on our CME Direct. This is what a bid and offer looks like. You can expand that. Obviously, it's not a live price at the moment, but in our WTI futures markets and our E-mini products as well, which is the same effective index, just a smaller contract size, you can see the bid and the offer. Again, very similar in price. Time, I would say this is probably not made in US. This is a screenshot in US hours. I would expect that'd be even tighter than that. It'll show volumes traded, and changes on the day, all the things you'd expect, and how you have to cross a market, or whether you choose to work a resting order above or below the market, or a stop. Again, the ISV or the front end that you operate on will have a lot of this sort of functionality as well. These are some of the standard products to sort of talk about. This is actually just top of book bid-ask spreads. If we look at, one would probably be the smallest tick size effectively. Some products trade in lesser tick sizes than that, particularly in the currencies. You can trade at lesser than 1 tick, which is why these products are showing that even during our trading hours, you can trade you can never really trade at less than a tick, but we have less than 1 notional point separating some of these bid offers in some of these products as well, which is why there's prices, or there's bid offers below the 1 point mark. Again, we have a lot of information on our website. Again, these are our key products. It also kind of highlights where and when liquidity arises. So from the earliest parts of the day, there'll be sufficient liquidity, I'd suggest, for any requirement that you might have, but you can see around later part of this chart when Singapore day kicks in and London starts to reopen, that liquidity again increases, which happens throughout the US day even more so. Obviously, when US and Europe are both in at the same time, that's when liquidity is really strongest. But we provide markets around all hours. Yep, sorry.
Yeah,
go ahead, please.
Is this information available on your website?
Yep, most everything's available, so you can see when trading hours by in a per hourly piece of information. Yeah, or you can most things. There's thousands and thousands of pages on the CME Group website. If you go via Craig, I can happily provide that to him, so you can find some information if you need.
Thanks.
Yeah. Okay, so we talked a little bit about transparency. a central limit order book. As I said, everyone has the same access to the market. All participants see the same bid and offer, which I think is, again, a very important thing. And Globex, which is our matching engine, has said, match on a first in, first out algorithm in almost all cases. So if you're crossing a spread or you're working an order, by and large, although there is some small differences in various products, but you're not going to be disadvantaged working a smaller order than a larger order. It's not the case that a larger order is going to be filled before yours. It's a time sequence, which is what first in, first out means. I think the last point is actually around just futures and options more generally. Like CME Group is the venue. It's the exchange platform. So that's kind of where the original liquidity arises in our products is on our exchange. Probably when you start looking at contract specs as well, it's interesting to understand if something's physically settled, physically delivered, or cash settled. That's a really interesting distinction. It actually means that at expiry, if you'll end up with a grain cargo or a shipment of a physical commodity, which I would expect I'm going to go with 100%. You don't want to be doing. So a lot of contracts are traded as cash settled contracts anyway. So they literally just will cash settle at the close of the final expiry on the last trading day, and there will be no physical deliverability. But contracts you potentially will trade have a physically delivered aspect. You'll need to be out well before first notice day, so understand the contract spec. And as I mentioned earlier, so you can choose to go long or short on a futures product. That's the benefit. You don't have to buy before you sell. You can sell before you buy, in the hope that the market will go down. Assuming it's not a hedge, in which case you may have a physical reason that you prefer it to go up, but that's a whole other story. We have a lot of resources on the website, as was mentioned a couple of times. CME Institute is freely available to everyone. Nothing generally is at cost. It's all educational material on our website. There's multiple short videos about how our products work. Things from cheapest to deliver in the bond space and how that works. There's a lot of really interesting stuff on our CME Group Institute. We have educators within the exchange who do a lot of good videos. I'd really advise you to read as much and learn as much from our educational resources as you can. So CME Group Institute. I think we lost. Oh no! And the last slide I wanted to just make mention is you can also get access. Go to the notification section of CME Group and get daily or monthly reports on some of our key asset classes. If you're looking at metals products, obviously you might have interest to receive a monthly notification when a new metal product comes about. And we have economists within the exchange as well who report on those macro trends that principally underlie a lot of what the CME Group offers in a product sense. So that's the best of the presentation I wanted to make with you all this morning. So thanks very much for your attention.
Thanks, Graham.
You're welcome.
Are there any questions for Graham while we've got him as a captive market?
Yeah.
No.
Yeah, go ahead.
Yeah. Do you see much of a variation between, let's say, micro and the main contracts?
In pricing?
Yeah, in pricing.
Nope. I mean, that's the word. I'm not going to use that word. There's traders in these markets that will make sure these prices are trading almost identically based on the fact that there may be slightly different tick sizes. So you may see something quoted slightly inside or slightly outside at any varying time, but substantially these products will be trading at the same underlying value. Yeah.
Yeah, my experience has been the 99% of the time they're pretty well line ball. Very rarely do you see much discrepancy. You do sometimes see it around the open, where the micros will perform slightly differently to the big girls, but generally it's pretty consistent. The information there, that slide that Peter asked the question about, liquidity, if any of you are doing any intraday trading, that can be really useful in order to have a look at where the liquidity is. You might want to focus on the markets that are liquid in the hours that you want to trade. that would be a suggestion I would put forward.
Yeah,
Anything else for Graham?
please.
The exchange fees on the minis cheaper than the standard ones? Yes.
They are. Yeah, all of our information, we're very the exchange is very transparent with everything we do, but all that information is available. There's some pretty large detailed spreadsheets and other things that are available with any updates of exchange fees and other things, but everything is available on the website. You'll see the smaller contracts accrue a smaller exchange fee. Please.
This may not be a question for you, but as you approach contract rollover, do you, on the continuous chart, do you switch to the higher volume perhaps of the next contract, or do you stay right to the end with the contract that's still available?
I move as soon as, that's probably a question for me.
Yeah.
Oh, okay, sorry.
That's right.
I move as soon as the volumes move to the new contract.
Yeah, no, I meant on the continuous chart, what do you use?
That'll come down to, so what we would have, like as an exchange, we just look at our underlying contracts. If you're looking at continuous chart, it's how the vendor of that chart produces it. So we will just have a price for each underlying contract. They're both equally important to us at that point. One will expire, one will continue. So yeah, it's not really a question for me, but I do understand your question. It's around how the venue or how your own trading systems would better identify that for you guys.
You'll find, I think you're using CQG QTrader.
Yeah.
You'll find that if you go into the chart setup area, you can actually create a continuous chart either at expiry or with volume or by month. So you can select which one you want to look at. For me, and as a trader, I want to be trading the volume, with the exception I've discussed with you guys before about beans, where I moved from November to March to June. I just use the 3 just because it's more convenient. And there's enough volume in those contracts generally at rollover to carry the sort of position sizes that you guys are. How many people are trading micro contracts? I know I've really pushed them pretty hard. Yeah, they've been really, really good for these guys. And we're going to talk about the micro Bitcoin contract. That's the focus of the next couple of days. So get your boys to trade some more. The volume's there. Seriously. Peter.
I have a cheeky question. The use MNQ, it's 1/10 of ENQ.
Yep.
Commission is for 10 MNQ is $9.40 or thereabouts, and for 1 ENQ is about $3.80. Why is there such a disparity between those? I can understand that there should be some, but almost 250% increase is pretty exy, I think.
Question of commission, I'd have to refer you to your provider. Any question on commission, I'd refer you to provider, to your clearer. I can talk about exchange fees, but I can't talk about commission as such.
Commission would be back to the broker, not the actual exchange.
Yeah,
So the
it's two different
exchange
things.
fees, but what the broker charges as a commission is a different discussion. So maybe Craig can talk to that at some stage.
Go ahead, please.
Just quickly on data, historical data. Like, can you just give us a quick overview of what you provide?
Well, there's no real quick way to do that. As I said, the exchange is generally transparent with most of the information. There's varying costs. It's a hard question to answer in a single case. If that's something that's interesting to you guys, I can maybe provide something to Craig that he can disseminate. But yeah, it's a really big topic, and it'll go on for a long time if I even start it. So I'd rather not. That's all right. Thank you for the question, though.
Anything else for Graham? No. Thank you very much.
Yeah, thank you very much for having me as well. I appreciate it. Thank you.
Thanks, Graham.
Yeah, thank you again.
Yeah.
Enjoy your day.
Thank you. So I was just while we're kind of getting through these things, Craig's here. Obviously, you're going to need a trading account. I think everyone here would have a trading account. Yes? No? Maybe? Yeah. So I thought while we were kind of talking about the CME and the product, it was a good chance to just have Craig maybe make a little presentation on the PropX platform, and he can answer any questions that you might have in relation to that. Maybe he can address the question on commission that Peter asked. Yeah, I can't assist with that one either. So I'm just going to plug Craig in because we need to wind him up, and then he will take us through to the first break.